Regulation is the challenge at the moment. I mean, some of this, you may not agree with all the points of this regulation, but actually some of the effort, I would say to the credit of the regulators that the spirit of the law in the latest FRTB direction that's coming on is actually righteous, in the sense that it's imposing a lot of stuff that actually should have been, the banks should have done themselves, 10 or 20 years ago. And in fact, something that quants, in some cases, actually have been trying to do and trying to get funding for, but previously have not been, has not had interest. So I think that some of the spirit of the FRTB project and going through all that, I think could have a positive impact on the way that we model risk and the way we behave in banks. But at the same time, it's also a tremendous challenge. It's such a big challenge that, for sure, it cannot be such a big and difficult task that it cannot be left to IT people or risk managers. Basically, the quants have to get involved if this is going to work. So that is, from my perspective, from my chair, the biggest challenge at the moment. The other challenge is probably more fundamental. Is to the industry also, is like the regulation. So the spirit of the law in FRTB, for example, I think is good. However, if the capital restrictions are so punitive that it basically drives out trading, I think it will have real impacts on the economy, because what's going to happen is that the liquidity buffer that we used to have in banks is not going to be there. So banks are not going to basically be the risk taker in market maker as they used to be, and I think that could have tremendous negative impact in the real economy, as in, for example, spreads and on your mortgage loan will just be higher because it is more costly to operate, to trade it, and because it's costly to warehouse the risk. So that's just one example. The other one is that you will probably see more volatility in general.